anything that it doesn't fly in the face of the laws of physics can be done. You can find a way to get it done unless it's physically impossible to get it done.
Hi, I'm Emanuel Balarie, and welcome to the FundSeeder Rise podcast. Today, I'm thrilled to sit down with Thomas Peterffy, a true pioneer who changed the way we trade. Born in 1944 in Budapest during a Soviet bombing raid, he grew up under communism where his family lost everything, teaching him that the only assets no one can take for granted are knowledge and reputation. In 1965, he arrived in America with $100, no English, and no network. He started as a draftsman, taught himself programming, and walked onto the trading floor in the 1970s. While others shouted orders by hand, he imagined machines.
1977.
I'm sorry?
1977.
1977. Okay, so exactly 1977, and you imagine the machines and that he could trade human logic into algorithms. He later went on to found Interactive Brokers, one of the most technologically advanced brokerages in the world, pioneering electronic trading, systemizing what others thought required instinct, and really democratizing access to global markets. So Thomas, thank you so much for joining me today.
It's a pleasure.
So Thomas, we were talking earlier. I was born in Romania. You were obviously born in Hungary. But one of the stories and the things that I have brought on that your parents taught you really was that knowledge and your reputation are two things that cannot be taken away. So I'm curious how that philosophy actually shaped the way you approach risk, decision making, and just building in general.
You know, my mother kept telling me that I don't think it had any impact on me. You know, I've been thinking, what does that really mean? I mean, it's very clear what it means, but so what? I mean, you know, I always wanted to know whatever I could, but I wasn't very good at learning anything.
Yeah. So that was your mother's philosophy, is what you're
Right,
saying,
right,
about
right.
knowledge and reputation. But in many ways, your path to where you're at was unorthodox. You started as an engineer, you started as a draftsman. It was a continual pursuit of learning and not necessarily even just defaulting to what you had learned. You know, how did that pathway of innovation from a learning perspective take you to where you are at today?
So as I grew up in Hungary, there was censorship. And so, you know, we couldn't have access to any contemporary books. But I was very lucky because my grandmother had a library of the classics, the English and French classics like Dickens and Balzac and Zola and Thackeray and Victor Hugo. So I read, you know, hundreds or thousands of those novels,
Wow.
and that's where I basically learned about anything because otherwise there was very sparse material in Hungary available for reading anything.
So that maybe from a knowledge perspective, did those early books help shape your worldview?
I guess, yes.
Yeah. So, is there one book that you could think back now that over the years you could say that that book was almost like a definitive foundation for how I view the world?
No, nothing specific. No, no,
Okay.
certainly.
Okay. Okay. Well, you came to the U.S. and still your pathway was definitely unorthodox. You know, for at FundSeeder, as you know, our concept is it doesn't really matter where you're at in the world. You don't have to be on Wall Street. You don't have to, graduate from Harvard. If you do apply yourself, you have an ability to grow as a trader and potentially manage capital. But when you came into the U.S., you only had $100. I think your dad gave you that from what I read based on your background. And you started this pathway of building a career for yourself. So I'm curious, do you think that sort of lack of options and just having $100 and that created sort of perspective of risk tolerance that many traders today don't experience because they've grown up with a lot of money and they have that safety net?
So yeah, I mean, money at the beginning was a problem, and I also wanted to get into business, so I had to, whatever little money I could make, I had to save to use later as capital. So what really gave me my start was at one point when so I learned to be a computer programmer early on because the job I had as a draftsman, the company bought a computer and they realized that nobody knew how to program it, and they asked around if anybody would want to learn, and since I didn't speak English, I figured computers would be easier to learn than a language. So I learned computer programming, and that gave me a route to eventually end up on Wall Street as a computer programmer. And so with the first money I saved, I bought a computer of my own. And then as I began to work on Wall Street in 69, somebody said to me, you know, there are all these options that people are trading over the counter and nobody knows how to price them. Maybe you could figure out how to price them. And I ran a large number of simulations on my computer, and I eventually realized that it had all to do with the probability distribution function. And from that, I derived my formula. But it wasn't really a formula, it was a computer program that I generated that was able to very well figure out the fair value of an option. You know, it was writing. So I ran through a lot of historical prices, and my formula eventually got to the point where my errors were equally distributed on the two sides. So I had the right expected value for the options. And that really enticed me to really save even more money and more money and more money. And finally, by 77, I have accumulated $200,000, and I bought a seat on the American Stock Exchange, and I became a market maker for options on the floor, being the only one who had what the right value for an option was. So it wasn't very difficult for me to make money there.
So we'll talk about the floor experience and the market making because I think that's obviously a pivotal time not only in trading history but in your history that launched you. But I'm curious, that moment of clarity that you had, I mean, you know, it was early, computers must have been early at that time. You know, what made you like even think through that process to say, you know, this is nobody's doing it. Everybody is. I mean, obviously the status quo is everybody's calculating by the hand of their mind. Like, what was that moment of clarity on your side that said, I'm gonna attempt to use this?
It just came to me naturally. I had no other way of thinking. That was the only way I thought about it.
And was it based on your previous experience using the computer for drafts for drafting?
Yeah, I mean, you know, for in surveying there are many simple routines that people use where you do simple calculations that take say 15-20 minutes every time you have to make one, and when I was at that highway design firm, I wrote these simple programs on those computers, on that computer, and you know that cut the calculation time to say 30 seconds. I mean, it was fantastic. I mean, I felt terrific about it because people were lining up with with their little calculation problems, and I fed them in and I gave it back to them. Fed it in, gave it back to them. So it worked very. I was very useful. I felt really useful, and that was great.
Yeah, and so I would imagine then when he came to the trading, the same thing applied, except now in a market with speed is a difference of making money or not making money. It was a
Yeah,
question of,
speed, right.
yeah. Okay, so take us then through. You left, you got a seat on the floor, and you went into market making, and I know one of the stories, and of course, tell us more in a little bit more in detail because I think it'd be fascinating for our users. Is you were bored, you were executing trades on a daily basis, and you kind of out of boredom came up with this machine, this algorithm, and then eventually, obviously, the famous robot that helped you launch into.
Oh, that was much later, yes. So, right. So, the idea was to keep automating everything. And so at one point, we had a completely automated market making system that would take in all the prices and put out our own bids and offers everywhere. But since the exchanges were open outcry, we had to get those bids and offers to our own employees who worked on the floor and try to execute as many trades as possible on those bids and offers. And as soon as they executed one, they had to convey that back to the office, it into the machine, and the machine adjusted the prices and gave out new bids and offers. So, and that went very well. And but the Nasdaq had an automated system, a matching engine, where people could sit by their terminal and type in bids and offers, and the Nasdaq, just like today, the Nasdaq computer matched up the bids and offers and did the trades and sent back the confirmation. So one day we had a visit from a vice chairman of the Nasdaq who said, "Well, you guys are trading up a storm. I wonder how you're doing it." And he comes into the office and he says, "But there's nobody here. What's going on here? I expected to have 20, 30 people sitting here screaming and yelling, and there's nothing happening. But how do you do this?" And so I pointed at the computer and I showed him that, it was just we spliced into the wire and we issued all the orders electronically. And he thinks about it and he says, "Well, that's not acceptable because look, here is in the rule book, you supposed to enter each order via the keyboard." And
Wow.
he said, "Look, this is unacceptable. I'll be back here in a week, and if you're not utilizing the keyboard to enter each order, you will be shut down." So we didn't know what to do, and then eventually we came up with this idea of building a box over the keyboard that had pistons, and the pistons were driven by the computer, and it typed on the keyboard with pistons. So he comes back a week later, he looks around and he says, "Well, nothing changed here." Now, at that moment, the box went because it was typing extremely fast and very loud.
Wow.
And he says, "What the heck is going on here?" And I said, "Look, we are entering each order via the keyboard. That's just as you suggested."
And that was then allowed, and he allowed it. He could not say anything
Yeah,
because it
but
was
there was nothing he could do about
yeah.
it. I mean, they could have changed the rules, but as far as the rules were concerned, we were in compliance. We entered each order via the keyboard.
Now, did you come up with that solution yourself? Because I would imagine if you put 100 people in the room, 99 of them are going to probably say, "Well, it worked for a while, but obviously we can't. We only one person can enter it." I mean, how many people would come up with like those pistons to Was that you? Was that the people you were working with? Somebody
Well,
would
I
come in.
didn't. It's unclear to me as to, we were, maybe two or three of us together. Unclear to me who, I don't remember who came up with that specific idea, but my determination always was that must be a way. There always must be a way. So as long as you know that there is a way, you can eventually, if you're sure that there is a way, then you will find it.
Yeah, and that's really good. You know, I have a 14-year-old son and a 12-year-old daughter, and I think many people who are starting into trading, you know, that might have this almost just ideas, or they're passionate about, or they have a conviction, right? Let's just say you had a conviction that had to be a way. And I think if I look back at your career, that's been a almost like a hallmark of who you are, where you're not going to give up. There has to be a way, and if just because you don't
Right.
see it now doesn't mean there's another pathway. Like what would you, how can you tell someone who has a conviction that even though there's everybody who tells them that it's not possible to keep going, what advice would you tell, you know, the younger generation if you see?
Anything that doesn't fly in the face of the laws of physics can be done. You can find a way to get it done unless it's physically impossible to get it done.
Yeah, yeah, that makes sense. So from a perspective of just because somebody has not uncovered it doesn't mean it's not doesn't mean it's not
That's
possible,
absolutely right.
and that's the idea of knowledge. So you continued on, and if you could tell our audience, so obviously very successful. Now you have these quote robots, and you created a market making firm, and most people today know you for Interactive Brokers. But before Interactive Brokers, Timber Hill was just a fantastic success story. Can you take us through that journey and how you shifted
Yeah, so well, you know, in the early 80s, we, as I mentioned before, the Nasdaq example, we created this computerized system that was driven by interconnected many IBM PCs. They were interconnected, and each one had the responsibility of calculating the prices very quickly for an option and constantly refreshing itself. So we had a system where we drove bid and offer markets for basically all the options that were traded in the United States and eventually also in Europe and Asia, where, by the way, the markets were already electronic by the 1990s. So in the US, that was still open outcry, and we had to have people who we would send these trades to, the orders to, and that was always the biggest challenge, how to convey our bids and offers to our employees on the floors. And so at the beginning, we put it on screens that we were driving by telephonic wires, and they were, and then the problem was that they couldn't read the screens from far away because we were not allowed to put the screens in the middle of the floor. We had to have them on the edge of the floor by the wall, so they couldn't run back and forth and look at the number and run back to where the trading took place. So then we replaced the numbers with color strips, and so you could, far being maybe 20, 30, 40 feet away, you could look at the screen and see the color strips, and each color stood for a digit. So people were able to read our bids and offers, and that's how we were doing the trading, and that was extremely successful. So basically, when I went down on the floor in 77, I had $200,000 of savings, and by 2007, when we went public, we had $4 billion of retained income. All after taxes were all paid, so it was $4,000 after taxes, and that gave us then the capital to go public, basically.
Yeah.
And so at one point we were able to replace these colorful screens with radio-driven handheld computers. So our employees then start to carry small handheld computers that were driven by radio waves, and we could communicate directly by radio waves. So the first exchange where we were able to bring in these handheld computers were the Chicago Merc, where in the S&P 500 pit we put in two people, one representing all the our buy orders, one representing our sale orders. And then we had this idea that we could connect via the internet people around the world to these handheld devices. So that's when and thereby they could interact with the other people in the pit. Namely, they could put in their bids and offers, look at the order book, which they would see the same way as the two people standing on the floor would see, and they could trade with the crowd. And that's how everybody, wherever they were, even in Asia, they could basically interact with the crowd. So that's why we called it interactive brokers.
So that was the natural progression from Timber Hill. Is eventually you saw like a much bigger opportunity
Right, right.
of then democratizing and offering that same type of system and process to people. You know, it's interesting, Thomas, like just talking to you in your journey. I mean, even from the draftsman and the first time you had the computer, it's really all about if something can be automated or you could place a system around it and you could do it much faster, then that becomes your edge. I mean, is that kind of the
Well,
general?
precision is probably more important than speed.
Yeah.
Yeah,
I'm sorry.
precision.
What's more important than speed?
Precision is because you see the idea was that the tighter we could make the market, the more often we were able to trade.
Yeah.
So we were always sacrificing profits for volume. I always believed that it's better to make a smaller amount of money on many more trades. So the profit times the trades to get the sum adds up to an ever greater amount. So because when we started in the options business, the bids and offer differentials were sometimes half a dollar. It was just
Yeah.
and there were since it was so wide, the market was so wide, it was very difficult for people to make money in the markets because they had to overcome that execution expense before they could make a profit. I always believe that the smaller we can make the execution expense, the more people would trade. And that is actually what happened.
Yeah. You layered on top sort of the market making strategy on the brokerage industry, whereas other brokerage firms are probably did not look at it from that perspective.
All right.
And that's really what made you successful. You know, one of the questions that I do have in terms of transitioning from Timber Hill, you decided to shut it down at a certain point, and so kind of a point that might be relevant to our listeners, like how do you make a decision to shut down something that is doing well, but perhaps is, you know, it's time to move on?
Well, the fact is that it wasn't doing that well when we shut it down. So what happened was that after the 2000 crash, other people started to realize that you could automate trading, and they decided to buy order flow from the retail brokerage firms. And by that time, I had interactive brokers, and I said, well, my market making operation cannot trade against my customers because that would be a conflict of interest. So I was regulatory also was obliged to keep the market making operation completely separate from the customer business. Other people went and they just bought order flow and they executed it against themselves. So as a result, the retail order flow basically disappeared from the exchanges. And as a result, our market making operation was doing less and less well. And at one point I said, well, we cannot continue both of these businesses. We have to go with one. Which one should we go with? And I said, okay, let's go with the customer business. And
Okay.
so that's why we
Yeah.
quit the market making business.
Yeah. Was competitors were also coming in? I mean, it was no longer. I mean, the different.
Competitors at that time were basically Citadel, Susquehanna, the same guys. Well, J Street is a new one, but
Yeah. So you
right,
transition.
right.
So right now for interactive brokers, I know it's you have traders from a lot of countries. I don't know what the exact number is, and you've expanded where, I mean, we have people that I've spoken to that are from the U.S. to Hungary to Romania to
Everywhere.
everywhere. When you built that, and even now in terms of how you're viewing of the future, is it look? I just want to optimize how much money I make because that's like from an engineering
No,
perspective.
it's not. No. I want to optimize how well my customers do, and this is what I'm really, really very, very proud of. So for 2025, the Interactive Brokers customers, the individual customers, have beat the S&P by 1.3%, all of them together, and that's over a million customers. So we
That's
took
pretty wild.
all the customers who started 2025 with $50,000 or more, and we looked at where they finished the year, and the S&P was up something like 16%, and our customers were up 17.3%. So
Well,
the average customer beat the S&P by 1.3%. Now, the average RIA customer, registered investment advisor customer, beat the S&P by 2.67%, and the big one is the average hedge fund. So we have about, what was it? I think 2,350 hedge funds, something like that. They together beat the S&P by 11.01%. That's a staggering number,
yeah.
right? So I am extreme. I mean, that's the ultimate that I couldn't have wished for anything more. That was
Yeah.
just absolutely fantastic.
Yeah, those are actually unbelievable data that you just reported because most people, when they think about retail trading, it's they lose money and they churn and there's
Yeah, and this is, of course, after all costs.
all
This is
costs.
after all costs.
Yeah.
It's all the commissions and exchange fees are all taken out of these performance figures.
So I'm curious, and we're going to spend the bulk of kind of conversations. Guys, I do want to get your thoughts on traders and trading talent and what you're able to see from your seat. But do you think at the core of why that's the case is it the lower costs? Is it the technology that's brought transparency in an education element? Like, why would you sum up versus other brokerage firms or retail traders why that performance has been there?
So it's all those things. Obviously, the smaller the transaction cost, the better you will do because you often, especially on larger orders for hedge funds who use prime brokers, their orders are front run by the prime brokerage desk. You understand why they are not performing as well as they should. But so that's the number one thing. Very low transaction costs, and obviously no trading with your customer's order. As a matter of fact, trying to. So we have an ATS, and in our ATS, we encourage people to trade with market orders. So we have resting orders in our ATS. And when we have many of the smaller retail orders come in, we execute them in the ATS as long as the bids and offers in the ATS are better than what we can see in the marketplace, right? So, but that way both sides benefit,
Yeah.
right? And that is extremely important. But maybe even more important is that our customers tend to be serious investors. So they do their homework. We try to provide as much research capability as possible. But today, with AI, there is all the research available for you.
Yeah.
You can. So we very much encourage our clients to do their own research. We have a lot of research facilities on our platform, but so it's very important that they be well informed. So we want our customers to be the best informed on the street, and they are.
Yeah, that's good insight. So Thomas, the FundSeeder thesis is that we believe and have always believed that elite trading talent is often goes unseen, and it's possibly some of the best ones are, and we've seen them actually, are trading at interactive brokers, but yet others, they don't have access to it. Like they don't know. They have the same tools, probably better tools, and they're out there. So
everybody has access to interactive brokers. I mean, you can open an account with $1.
Yeah, you can absolutely. But from the point of your seat and now transitioning, because I know a lot of our viewers are these active traders that in many ways follow your playbook. Like they've honed their craft. They're using interactive brokers, and now they want to maybe launch their own firm, or they want to transition and to grow. But there's still obviously tremendous barriers of entry to that. But one of the things that's helpful is from your seat, when you've observed the best traders, however you want to define best, discipline, etc., what are some early behaviors or habits that you typically say, hey, this signals long-term success? Like if somebody's starting to trade in this way, or like, I think this guy has something.
So what is most common among the best traders is that they always use limit orders. They very, very seldom go and take an offer. It almost never happens, or hit a bid. They always negotiate in the marketplace with limit orders. And I think that's probably lesson number one that anybody in trading should understand.
Any other couple other points?
Well, other than that, it's again, I keep emphasizing research. Know what you know the stocks. Know the stocks that you are trading. Don't just get into anything that moves only because it's moving. You have to understand what you're doing. You have to understand the underlying businesses.
Yeah, so I would imagine from a data perspective, I'm just curious, it could be wrong, if you're able to see, if you have a funnel of all the interactive broker traders, the ones that use limit orders funnel down through, and then the ones that you see maybe are using your research portals, or they're like analyzing research or listening to stuff even more. That it's almost like a disproportionate, like I'm guessing, but you probably know better, that those are much more likely to succeed than the ones that are not doing those 2 points that you talked about.
Absolutely. And what's very important is using options. I mean, almost all our successful clients are heavy users of options.
From a risk management perspective, from just a
both, for risk and for profit, right? I mean, especially in these markets where everybody is sitting on substantial gains, right? What happens is that most people try to sell out of the money calls against their portfolio that they are holding. As a matter of fact, many people are just buying in the money calls and selling out of the money calls, and that they generate their profits that way, and they don't even use stocks, many of them.
Interesting.
And of course, many, the people who have a lot of money can afford to sell puts. So they sell puts, they sell calls, that's how the money comes in.
Yeah. So your viewpoint, and this is extremely helpful in terms of some of the behavior traits and sort of habits, if you will, that these traders are doing. Are you, and I wouldn't say anti, that's not the right word, but what do you think about discretionary traders, right? Because
discretionary trading,
discretionary versus systematic. So for people who don't have necessarily an algorithm in place.
Oh no, I don't believe in discretionary trading at all.
Yeah.
I never used that word, but you have to have a system or a purpose or a yeah, you have to have a regular way of doing the business. It's not. If you don't have a system, you
Yeah.
no. That you can do that for fun, but this
But
is
not,
not supposed to be fun. It is fun when you're doing well. It's a lot of fun, I tell you that.
yeah.
But it's not just on a lark you buy or sell something.
Yeah, yeah. Well, one of the other interviews I've had have been with these trading coaches or trading psychologists, if you will, that focus on mindset. So this is different than creating a system or trying to figure out the quickest way to optimize. But some of the best traders in the world, some of the people, and have had psychological traits where it's been an aspect of mindset. And I see you as such, right? One who has been disciplined in their mind control. Is there something from mindset going back to the early days when he came to America from Hungary that you think predicts long-term success, whether it's in trading or in life?
Yeah, I would think that it's very important to have a purpose, always have a purpose, and to write down where you want to end up, and to write down the steps how you're gonna get there, and to review those steps very very often, and as you go along try to modify them, and never let a day go by without taking a step.
And do you still do that?
I don't do it anymore, but I did it for something like 30 or 40 years.
Yeah.
Now it's so ingrained that it's all in my head. I don't have to write it down.
Yeah.
Yeah.
Yeah, that's that, and it is very similar to almost this self-reflection or this journaling and realize what you can improve and what you can do. And again, that's applicable obviously for trading and building businesses, but in life, right? I think that's
Yeah, absolutely.
that's a valid point. So going back to, curious your thought. Obviously, you've given access to anybody from anywhere around the world can have access to technology, get excellent pricing, research to trade their accounts. But one dilemma, not dilemma, but one of the things that we've been trying to solve at FundSeeder, and I think when I first met you at your office, I don't know, maybe 10 years ago, is how do you democratize, or how do you allow a successful traders now to compete against other big fund managers that have the relationships, the connection, the infrastructure? You've seen talented traders on your platform, and so have I. Why do you think the industry from an asset management perspective is still not very much automated and still relationship driven, who the gatekeepers? And the second part of that question is, from your wisdom, like, what is a way to, and is there a way to potentially automate and give access to talented traders who then actually manage money, better price for investors, and apply really the same model you've applied from market making to trading, but to the asset management side?
Well, I think the issue is that there are many pools of capital where the owners of that capital are not directly responsible for the investing of that money. And then the people who are entrusted with it institutionally sometimes maybe don't really care as much as if it were their own money. So, they are maybe not so involved, they entrust the money to somebody else to manage, and there are situations where, a pension fund holder sits on one end and there are two, three, four people in between that pension fund holder and the ultimate decision maker in the investment. And that, of course, is a problem. But that's how you up.
Yeah. So it's more of the infrastructure on that, unless somebody has direct control over their assets to control it, then you have those are classic gatekeepers or barriers that are in place right now.
I mean, the fact is that any simple person who doesn't know anything about anything can open a brokerage account and buy an ETF, right? Buy, say, the S&P 500 ETF and just sit on it. That person will do a heck of a lot better than having various managers investing their money.
Yeah. Okay, Thomas, transitioning just for a few more questions, and I really appreciate your time. You're still working right now. In fact,
Oh, absolutely. I'm working every day.
Can I
I'm
throw you a
sitting right here at my desk.
Can I throw you a retirement party? I mean, when are you going to retire? Or
There
do you
is
feel
no
that?
retirement party, not on the horizon. No, no. People who retire die within a year or two.
So, so yeah. I was obviously kidding about
Right.
that, but
Yeah.
but you strike me as a person who's always looking and trying to.
Well, there is a heck of a lot more things to do. Yes, I
So
mean,
what are
I'm currently extremely excited about prediction markets.
how so?
So I think that is going to be the next big thing. I expect that to become bigger than the securities markets. So it's because it all has to do with, of course, with the future, right? I mean, investing has to do with the future. It's prediction markets is more delineated in front of us as to how to go about these things. So we have at Interactive Brokers, we have our prediction markets, and we ask questions. We ask questions from people. Questions may have to do with whether the Fed will cut rates or not, or when, or especially, big crucial questions like global warming, as to at what rate it is going to happen, and what what are the steps that we can, as the human race, can do about it, and how and when. And so there are large multiple of questions, and we are getting the consensus of people by the answers, right? And so each question, you can buy a yes or no answer for each question, and the correct answer pays $1, and we pay you interest on the current market value of your answers. In other words, you can maybe buy a yes on some question for 20 cents, and the thing moves in your favor, and now it costs 70 cents. You get interest overnight on 70 cents. So, and if you have, say, if you have bought 1,000,000 of the questions, of course that's $700,000, and that's a lot of money, right? And often the interest income far exceeds the ultimate payment on the answer. So this is slowly coming together now, and we as we have more and more questions, we are the consensus answers basically are building blocks from which we can construct a model of the future, which is available for anybody to see on the platform, right? And the investments will be within that. It's much easier to recognize the potential of a company if you can see the future of for that company's products or services, right? How that will evolve, right? So this is going to be a very, very big deal, and this is going to happen within the next several decades, and this is going to replace basically how we trade today.
Wow. And what makes, and as you were thinking that, I was actually, again, thinking about my son who's 14, 15. He wants to learn to trade, and there's different aspects of it. My takeaway is to tell him, son, look at the prediction markets. Forget about like trading NVIDIA or anything else, and try to learn it and optimize it. Would that be accurate?
Yeah, but so The problem is that, the most popular prediction markets are on Kalshi.
Yeah.
And unfortunately, they are focusing on sports. And that is not, that's not what we should be thinking about. Sports are a lot of fun, but it doesn't tell you anything about the future as to who is going to win a specific game, right? Let's focus on economic questions and environmental questions and social questions, and those are the questions where we can put together the consensus. And
Yeah, I think you bring up a good point because that's been my parental concern with prediction markets is there's a huge sector that's going to be focused on almost like this gambling mindset, right? Like just like who's going to win the basketball game or who's like you mentioned in terms of sport.
right, no, that's silliness.
And so, but your focus and where you think it's eventually going to go is the fabric of prediction markets that actually help society and actually give real intel of the future of trends in the capital markets or anything else like that.
Absolutely, yes.
So how is Interactive Brokers in the same way you've used? I mean, how are you differentiating yourself? Like what is?
What differentiates us is the questions.
Yeah.
Right? Because we have. It's not to say that the others do not have some of the questions we have, but that's not their major focus.
Got it.
So there is a lot of volume now in sports, and that, of course, leads everybody to misunderstand what prediction markets are all about.
Yeah. Okay. Last question, Thomas, and really appreciate it. I know you like to automate things. You have process. That's what keeps you. But is there anything that keeps you up at night? I mean, I use that as a phrase. I'm sure you probably sleep well. But the things that you worry about that you can't control, or you're just like, man, I'm really, really worried about this one thing. I don't have answers to it, but it really keeps me up at night.
Well, as I was born and the country I grew up in was a socialist country, and I experienced a system in which I grew up where nobody had their own incentive to do anything because you were not allowed to enjoy the benefit of your own work product, right? That's basically socialism, where everything that we create gets thrown into a bucket and then it gets redistributed, and eventually fewer and fewer things end up in the bucket, and everybody suffers. So I'm worried that the idea of socialism is taking hold all over the world again, and it's going to be a very, very bitter lesson. So that's what keeps me up online.
Yeah. You've experienced it, and you've seen kind of the way it starts, and there is truth to that, I think. Almost like it should be true, right? Like everybody should just share from the same thought, but
Right. So I'm sorry, you're cutting out. I can't hear your words.
Yeah. No, I just said I understand and share your concern. As my family's also grew up in a communist country, and you kind of see certain things pop up that are concerning. And
right.
So, but Thomas, thank you so much for joining us. Your wisdom was, I think, would be very helpful for traders, and I know me personally, and even my son, who's starting off. So we're gonna have him focus on prediction markets and making sure he automates.
Yeah, that's great, Emanuel. Great to see you.
Thank you.
Bye-bye.
Bye-bye.
Thank you for joining us on the FundSeeder Rise podcast, where we spotlight exceptional independent traders from around the world and explore the future of active money management. To learn more about FundSeeder, our mission, and how we support emerging managers globally, please visit us at fundseeder.com. The information shared in this episode is provided for educational and informational purposes only and should not be considered investment advice or an offer or solicitation to invest in any fund or trading program. Trading futures and other derivatives involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Until next time, stay curious, stay disciplined, and keep rising.